Welcome to the Inside Market Analysis. My name is Jeff Killian. I am a U.S. securities trader, technical analyst, and educator. And before we get started tonight, I want to take a minute and thank everyone for taking the time to be here with us with an open mind and with the expectation of learning something new. That something is something that you can immediately incorporate and use into your current methods to become a better trader or investor. Tonight I'm going to present to you a market analysis surrounding the Dow Jones Industrial Average. I'm going to show you how it arrived at where it is today, what is the current state of the market, and what are the real probabilities for future directional price movement. I'll show you the indicators that I use every single day on an end-of-day basis to analyze the Dow. And after that, we'll walk into an actual trade that was taken by myself on a 3 to 5 day move that brought me in about 3.2%. I'd like to talk about foundations of profitable trading here for a moment. I believe that learning the correct application of technical analysis is the foundational skill necessary to become a real-life profitable trader. It has universal application, so it doesn't matter whether you trade stocks, options, forex, futures, ETFs, you're a fund timer. The time-tested techniques can be used to analyze and predict future directional price movement on anything that has enough liquidity. This is your opportunity. You can learn what a professional does. You can match and model what really works. And with the foundations course we offer here, you can advance from beginner to intermediate level in a fraction of the time and then live more of the life you want. For my part, the people who don't really know me, I've been trading actively for 13 years. I use only technical analysis to make all my trading decisions because this way everything is 100% objective. In trading, there's two methods to use. One is objective and one is subjective analysis. Subjective means almost subject to an interpretation and an opinion about something and not clear, not concrete. Objective analysis is where our findings can be verified, quantified, and be found as to actually be the truth. And therefore we have some real actionable intelligence that we can act on. The major indicators that I use every day are the standard MACD stochastics, money flow, volume, support and resistance levels laid out with horizontal trend lines, Fibonacci. I like to use Fibonacci because it helps me identify high profitability profit targets when I'm getting into a single stock selection. Now, again, as long as we have enough liquidity with the correct application, when you know you can trade any market, it has to have enough liquidity and it can be done. So we're not just subject to the U.S. now. If there's opportunities in other areas, we can trade them. London, Singapore, Australia, Germany, wherever there's enough happening, it is possible. And I have to say that I use Metastock trading software platform every day to make my decisions because it has everything that I need. I use the professional platform, real-time and end-of-day analysis. So we really have a complete package here for you. For those of you that are new to trading, we offer a couple different services here. We'll get into them in a minute here. But I've had a lot of people ask me lately, so I put up the slide real quick. We'll run through what is technical analysis. Why is it so important that I learn it? Technical analysis is really your visual roadmap and compass, and it's telling you where you are right now and where you're going to be in the short-term future. It is the study of price movements within price charts and it uses mathematical indicators based on price, time, and volume analysis. We use chart patterns, trend lines to determine the current state, again, of any security, any group, any sector, any market. It is the preferred method to use to determine if there's a real opportunity or not, for the simple reason, again, that it's 100% objective. This is critically important to understand. Know that anything that's on CNN, anything that's coming across the magazines, a reported, supposed insider article about a company is set up to throw you off course so that the guys that are inside the market, again, the smart money people, can make the money by taking yours away from you. This is how it works. If you use fundamentals, okay, that's fine. You can. But don't use them without learning the correct application of technical analysis to know when to time those buys and sells. I want to get right into the presentation here on the Dow. So right now, what you're looking at is a end of day candlestick chart of the Dow Jones Industrial Average with volume in the subgraph below. Here I use a 21-day average daily volume, average in the red line, overlaid the volume here in the subgraph again below. Now, what I need you to understand is that I'm not per se a practitioner of candlestick patterns. I don't wait for specific patterns to develop. I use no special software to be able to determine entry and exit points. I use candlesticks because of the visual advantage they give us over every other type of charting. The market turning points like here, 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 and here are so readily identifiable over, again, any other type of charting. So let's get back here to this original volume spike that I want to talk about today. This spike acted as the catalyst to drive prices all the way up to this point here, where we had some sideways move and a short-term correction down. This volume spike, again, by the institutional people, insiders, acted as the catalyst for prices to move back up to this level here, another short-term correction here, and this volume spike acted as the temporary sell-off sideways move that we are in at the moment. Now, I believe that this volume spike right here is a cross between accumulation and distribution, and I'll explain why I feel that way in just a minute. Let's take a look at some of the other indicators that I look at every day. On the market side, I use the 4 and 8-day exponential moving average because they hug the market turning points very closely and readily, again, identify and confirm the change in direction of price movements. 4 and 8-day on the market side. 3 and 7-day on the stock side. Here we're looking at the advanced decline oscillator. We need to understand that there's a lot that's happening market breadth-wise behind price movements, and a lot of times you can see clearly here we had a run-up with a divergence here which signaled the continued momentum to the downside that this indicator proved out, clearly showing that although prices were moving sideways here, that there was going to be an additional correction. And sure enough, that happened. This is an advanced warning type of indicator to show you, again, a behind-the-scenes look of what's really happening, regardless, in many cases, of what the price action is actually saying. Here at this point, we had a huge spike up, indicating that there was a lot of big money that was moving back into the markets. Now understand that a lot of times, more often than not, the big money players will come in before prices go ahead and continue with a new uptrend to the upside. So based in isolation, I believe that this is accumulation. This is a small sell-off here, but this accumulation here is set and poised within this sideways pattern to continue for another upside move in the short-term future. It's not going to be an explosive move unless we see some serious volume, but it will be a new move to the upside. Confirming that, we have the money flow index. Now, two different scenarios for money flow. Prices moved up here. Money flow indicated a fairly strong negative divergence, and that this was in fact a sell-off, inflated highs. Now, prices moved back around here, sideways back down, and money flow confirmed that. So you could have actually been flat here if you wanted to, right? And got out, major profit, and got back in again here at this point when money flow had turned around and started to move in an upward direction here. This spike on money flow here, to me, is clearly an indication of what was represented by the secondary uptrend here. Because the insiders, the institutional guys, again, the people that move stock prices bought here and knew full well that there might be a short-term correction and prices would again move up to this level. We'll get into Fibonacci in a minute. I want to explain how prices get magnetized to these levels, and it's so much more than a coincidence because the law of nature does have direct application to trading stocks. Here, another confirming indicator, stochastics. Remember that stochastics is our leading indicator. This is the one that's the scout that's going to go before anyone else to signal market reversals. Here we had a crossover from below to above, and again the 20 line signaling this move here. Again, below to above, signaling this move here, back down, confirming our sideways consolidation period where we sit today. On the MACD side, the MACD is one of my favorite time-tested indicators because it not only acts as a trend following but a momentum indicator at certain levels. Here now we can see that we had a crossover from below to above, signaling the initialization of this big move here. Our crossing from above to below signaled along with this downward momentum, again, while prices were moving sideways, that this was not going to hold up. Sure enough, cross from below to above, signaling the new uptrend here, and here we are today, confirming price movement moving sideways. Fibonacci. I use Fibonacci on all my market sector group individual stock analysis, and I use it because it works. It has direct application to trading. You can rely on it to identify market reversals, support and resistance levels. In this case, remember, at this point in time is exactly where I initiated Fibonacci, to this data point and our secondary here. Now we have to remember, as time moved forward, we didn't know exactly what was going to happen. But sure enough, what did happen is that prices moved up, 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 and up, and found 100% retracement level, turned back around, saw the low of this consolidation period hit 61.8% retracement level to the downside. Prices moved back up, 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 and here we reached a 161.8% retracement level on this OG here. Now that is no coincidence. Again, the laws of nature do have direct application to professional trading. And as it sits, we are now in a trading channel between this level and this level. So what you've just seen is an analysis of the Dow Jones Industrial Average using the most time-tested indicators, the same ones that I use every single day to make my market analysis calls so that I can be on the right side of the market when I am trading. Now, the trading methodology that all roads lead to, whether you're studying here on the one-on-one developmental training end or the foundations course, everything leads to finding high probability trades. Now, the beauty of that style of trading is that the market can be moving sideways, net neutral, and you can trade and you can make a lot of money. You don't have to wait for the market to be trending in an upward direction in order to go long, or in a downward direction to go short. With this type of trading strategy, again, the market can be net neutral, or your sector and your groups that you're looking at. Because, you know, there's always a leader in either direction. There's usually two, the first and the second, that turn everything around. I'm talking about the individual stocks within the subgroups that are assigned to the groups, that are assigned to the sectors. And these are the ones that make the most money in the shortest period of time. So let's get right into that. I'm going to close out this window here, this workspace on the Dow, and we're going to move right into the symbol MPW. Okay, again, MPW was an actual trade that was taken by myself some time ago. And I'd like you to take a look at exactly what I was looking at the day that it happened. This is the actual day that this stock came on my radar screen right here. We had a nice downtrending chart pattern right here. Low volatility, low beta right here. Formed a new base with a huge volume spike right here. This is what I look for, because I like to know that I have formed the consolidation pattern period within the security, no matter what I'm trading. And I have a lot of volume behind me, and there are real possibilities for a change in directional movement. Now, as we move forward in time, we had an additional spike about a little less than half the day before, which was an additional confirmation. And sure enough, prices moved upward, 2 additional spikes, upward, 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 and then started to move sideways here. So this volume spike and this additional one here, and these 2 little ones here, acted as the catalysts for this move all the way up to this level, which coincides with a previous level about a month and a half before. Now, remember these type of chart patterns, because these are important. These are the ones that we like to act on. We talked about money flow in the market side analysis. Money flow is the indicator that depicts the real tide of confirmed funds, really, who have come into a stock. I'm talking about the insiders, the smart money, the people who control stock prices. These are the ones that we're tracking. So at this point, money flow was moving downward, 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 and it actually crossed from below to above an internal trend line that I drew here, and had some upward momentum, signaling a reversal. Now remember, we had that huge volume spike, so the money flow is in fact confirming that the move was real, valid. People really did buy those shares, and now this stock was under serious accumulation. This is the value of money flow index. Next, we had stochastics here, cross from below to above at this level, and again at the 20 level shortly thereafter. Remember, stochastics is your leading indicator, showing the way for a change in directional price movement. Here we had the MAC, the indicator, same thing. Moved from below to above with this cross here. Previous to trade day. Upward, continued momentum to the upside. Now, let's take a look at Fibonacci and the breakdown of the trade. The beauty of using Fibonacci is that I know where I'm going to get out before I get in. This is critically important because every trader needs to have a plan. There's a setup, a trigger, and a follow through. The setup is everything you just saw. The trigger is the day to get in. And the follow through is where you're going to get out. In this case, I knew. Now remember, this is the day that I actually initiated Fibonacci right here. And those of you who've seen this trade on YouTube shortly after I made it, and on the previous IMA webinars, the same week that I took the trade, knew that this was exactly the way I laid this out. We connected this data point here, the secondary point here. Now I know at this point, at this moment in time, that I have the ability to get back to 23.6, 38.2, and hopefully, if everything goes my way, 50%. This is where I really want to be because I know I can make a lot of money. And I can get out on a rally, get my fill, not have to worry about getting manipulated by the guys on the floor. So here's what happened. I got in this trade right here at 12/28, 2010 at 10:43 with an initial stop right about here at 10:16 with a price profit target at 11:50, okay, which was all the way back here at 100% retracement. And that's how the risk to reward ratio was calculated. I know that for every dollar that I'm going to risk, that I have to have the ability to make 3 or I'm not taking the trade. And this is why the chart pattern with everything lined up using Fibonacci as a place to get back to on a sellout, on a rally, is everything that we need in order to create the scenario to trade a high probability trade. Again, in here, out here, a 3-day move for 3.2% in 3 trading days. Actually, it was less than that. It was probably about 2.5 trading days. Now, every trader knows that the most amount of money to be made is when the market, group, subgroup, or stock turns around and breaks out into a new direction. But the majority don't know how to quantify the probabilities of that move. What I just showed you is the basics of how to do it. Is there more to it? Absolutely. Can you learn it? Absolutely. Because I can demonstrate it and walk you through it the same way we did right here tonight. The reason why I get out of these trades in 3 to 5 days is because I know from experience that after this explosive move has happened, the majority of the time, prices move sideways and my capital is tied up, and that's not going to happen because I need to get out, preserve my capital, and wait for the next high probability trade to come along. If it comes along, I take it. If it doesn't, I do nothing because my greatest positional advantage as a trader is patience, and I can teach you what is real patience and how to employ that with regards to trading stocks. Now, at the end of it all, we wound up with a highly profitable trade in 3 days, and we limited our risk to a very small amount of money so that if we did get stopped out, we got stopped out with next to nothing. The key to longevity in trading anything is superior risk management. Can you learn it? Yes. Do we teach it? Yes. Does it work time after time after time? Yes. So what I have just demonstrated, what you have just witnessed, is a real demonstration of the correct application of technical analysis as applied to the Dow Jones Industrial Average and almost the exact same indicators as applied to single stock selection to be able to trade profitably, limit your risk, make a lot of money in a short period of time, and It doesn't own you, not like day trading. So let's get back to the final slides here for a second, and we're going to finish up tonight. I want to say that what we as individuals are willing to do to educate ourselves, to put our heads down, to learn how to trade, can create a positive change not only for us and our lives, but for the lives of our families to come. It can be handed down. And, you know, in today's schools, Rutgers, Yale, Harvard, the best of them, where people are paying a lot of money to go to, the previously ignored curriculum on how to navigate investing and trading in markets has now become mandatory. It's standardized. And in today's world, and financial institutions now require refresher courses on technical analysis to remind them that the simplest methods are the ones that work the best, and we don't have to make things more complicated than they are. It's not necessary. Now, we know through education, as educators, that the highest results method is one-on-one developmental training. This is direct impartation of knowledge from one person to another. And it works because it's just you and I in a webinar environment. You ask me questions, I answer them on the spot, and we address any inclarities you might have in the moment. So here, what you will learn is the correct application of technical analysis, not only to analyze the current state of any market, sector, group, or stock, but again, the higher probabilities of their future directional price movement. And the main thing, if I could say only one thing tonight, is that your buy and sell decisions based on fundamental research of a company or other methods of analyzing with technical analysis should never be made the same again. You got to use rule number one first, and that is when. How to know when to buy and when to sell. This is what we teach. There's also a foundations course that's available coming up very soon. Starts the 20th of June and runs to the 24th. It's a 5-day course. You can read all about that on the web. It's very privatized with a limit of only 7 attendees, so you get the individualized attention that you deserve. Everything is recorded, and all the daily classes, the course as a whole, is yours to keep for a lifetime. And upon completion, you're welcome to the open door policy that we keep here at the Inside Technician. So this concludes our presentation for tonight of the Inside Market Analysis. Please stay tuned to the webinar calendar, and all the upcoming events are listed there every new month for the entire rundown of what we will be presenting to all the subscribers. Again, this is Jeff Killian for the Inside Technician. I thank you for being with me tonight, and I look forward to working with all of you in 2011 and learning how to become a real-life profitable trader. Good night.